So this is not trade advice. Anything that you hear and see, you should be. All right, welcome back to another AM session for the Micro E Mini. Before we begin, this context is for educational and informational purposes only. I am sharing my personal market analysis and trade reviews, not financial advice or trade signals. Consult with a licensed professional before making any trading decisions. All right, so let's get into it. So, for me, the AM session has just wrapped up. Normally, I'm off the charts if I don't see significant price runs higher or lower. I'm pretty much done by 11. So right now it's 11:35. So what we'll do is we'll just go out to the daily chart real quick. All right, and then this morning you see that we gapped down and we ran out the sell side, all these sell side liquidity pools here, and then we repriced back into this actual wick gap. And what I can do is I can do this. Okay, so if you haven't followed along, you remember this chart, right? With the suspension block here, we had these levels transposed. I just dragged them out in time. The volume imbalance dragged it out in time. So those would be the next downside objective should price want to see some carryover as we just reprice back into this new week opening gap, or do we want to get back up into the suspension block? So there's a lot, still tight ranges, but nothing here was random. So when we drop down to the hourly chart here, right, the suspension block that I showed you yesterday, right, those two upside levels, if we ever do decide to run higher, those daily levels transpose down. So that wick, so that daily wick, that daily wick is now transposed down here. So that is now the turning point. All right, and then we start to reprice higher back up into the new week opening gap. This up close candle right here is 10 o'clock, 9 o'clock, and this is where we'll spend our time in right here, pretty much in these 3 hourly candles. Just looking at it on the 30-minute chart. There you go. All right, so you have the gap there. I bounce off of here, right, with also a new day opening gap from the previous Friday's close to Monday's open. So we had a reason to want to see if price did in fact want to trade higher, and if it did, then would there be some type of one-sidedness to that price run, any entries within a certain time window. So again, that time window for me is 9:30 to 11, but I know that I need to push it to 11:10 just so I can get that 10:50 11:10 macro in, just in case I see something late, like a late price run, like kind of like today. I can kind of still execute and then just manage the stop, knowing that the volume will be lackluster, right? So the only reason I try to be done by 11:15, because any type of velocity or volatility in the market, if it hasn't occurred by between 9:30 and around 10:15, 10:20, 10:30, right? If we haven't been one-sided by now, then from 10:30 to about 11:10, I'm kind of just sitting in front of the charts, being disciplined, making sure that I stick to the time that I'm supposed to be sitting in front of the charts. I'm not disrespecting the charts and leaving early. I'm sitting through it. I'm still monitoring things. And then it forces discipline not to take. I'm sitting in front of it, but I'm not taking anything that I don't want. So it helps with that. And I just understand the time factor to it. So now let's get into a blank chart. So, but remember all of this though. So the gap above us, week up in the gap above us, new day up in the gap above us, trading down off of that daily wick. We started to propel higher, smaller fair value gap there. So we're just banging in that this morning, and then we could have seen higher prices. Okay, cool. So going into the market this morning, I was expecting higher prices. So let's get into a blank chart. And let's start at a 30-minute, 15, 5, all right, so that's the gap that we said we could draw up into at 9:30 or between 9:30 and whatever time that we're looking to be inside the market. 1 minute chart, and then what I do is I always include the 2-minute chart also. And then what we'll talk about first is basically what was happening between 9:30 and about 10:40. Excuse me, 10:40, 10:50. All right, so on both sides of the chart, I have the 2-minute chart and I have the 1-minute chart. All right, kind of closed in on kind of like the current price action that I was seeing. Basically, just a lot of back and forth. All right, not a lot of one-sidedness, right, to specific levels with minor small retracements that allows for entries. All right, it was a lot of back and forth. Clearly, it was a lot of back and forth this morning. So with that, if you are a sustained runner trader like I am, and to me, I call it Jade. So Jade to me is these one-sided price run days that are like 200 handles, 150 handles, and it's just a smooth, low resistance liquidity run. That's what I'm looking for. So anytime I see we open at 9:30 on this candle, we trade up, we run out the buy side. So we run out that high. This fair value gap, we trade back in and we don't respect it. So we trade through it. Okay, and then my mindset was like, okay, maybe we are going to continue lower like we already have done from the morning session, from when price opened on the, let's just go out to it. So price opened and it traded lower. It traded lower down into a level that we already know. It traded higher. So once it got to right here, I'm like, okay, well, we already ran the buy stops here. Tapped into the new week opening gap with that wick. Do we now see price begin to now run lower and run out the sell side liquidity pools and return back into inefficiencies inside of that range? So that's what I'm looking for. Do we start to spool lower, fast, one-sidedness, targeting levels inside of that range? Or do we just begin to move sideways because, one, there's no news, two, economic things and factors, and three, we haven't been one-sided. Price has been a little wonky for like the last month or so. So February was wonky, and now March is kind of like even more wonkier. When I mean wonky, I mean it's just a lot of up and down. There's no one-sidedness, and if it is one-sidedness, then it is like at times that I normally don't trade, and I'm not going to trade. So I'll just wait for it to come back to me in my session. So again, 1 minute chart, 2 minute chart. All we seen was this. So open, higher, lower, no no fair value gaps, no swing highs to do anything off of, right? And if price wasn't to go lower, you will see it just drop down, just start to begin to reprice lower. These up and back and forthness, there's nothing in here clean at all. There's just a lot of big ranges and back and forthness I'm not interested in. So I took no trades this morning, and I'm okay with that. The one thing that I did see though that reminded me of the macro at 1050. So we have the fair value gap here, swing low here. This is the 2-minute chart. You don't see this on the 1-minute chart. On the 1-minute chart, all you see is the first fair value gap. The second one, ooh, okay. I don't think we did though. Let's look at it. That second one, I don't think that second one got tapped into. The low on this candle comes in at 29.75. The low on this candle comes in at 30. So quarter of a point off from being touched, but it did return back to the first fair value gap. But this right here, if you don't have the 2-minute chart, sometimes you'll miss moves that are kind of like I learned that too. You'll miss moves that kind of deceive you on the 1-minute chart, but they're there on the 2-minute chart. So nice firm fair value gap, swing low here, and then you would have to catch the price run higher, and you have to manage your trade on the 1-minute chart. So stop obviously on the 1-minute chart to be, if you were to enter on the 2-minute, you'll be entering there. Stop would be here, so 83 handles. But once price begins to move up, because 83, let's see, price starting to move, so putting on the show for y'all. That'd be your 2-to-1 right there. So stop there, 2-to-1 there, and as price begins to do like all these back and forth movements and price runs and things like that, you'll just be moving your trade. Someone asked me about this on TikTok. You'll just be moving your trade under each swing low. So we trade it down, we trade it up. This is also a swing projection too. So from this candle's low to that candle's high is a swing projection that you can use for targeting. So half of the range. So from that high to that low, that's a range. So if you take half of that and you price project it up, half of it is right there, and that's where that gets tagged at. The next full range on the expansion level will be up here, and that'll be somewhere by your take profit. But as price begins to start running out previous highs, so this small high, once it ran out that small high, I'll move my stop below that low. We trade down, we trade through that swing high, I move my stop below that low. As soon as you trade through that swing high, I move my stop below that low. Once we created this fair value gap, I will put my stop right below that fair value gap. Because if price is one-sided and it's want to go higher, it'll tap into it and then go. If it want to go lower, it'll go lower just like it did. It'll respect this wick and then go higher. But me, I have one contract on. I know my entry is somewhere up here. So it's me getting stopped out right here, and me entering somewhere within that 2-minute fair value gap around like right here. That's not a lot. So I'm gonna go ahead and bag that, and I'll be okay with being stopped out and just catching it tomorrow. Because I know there's going to be a day where it'll just run. It'll just small retracements. It won't be these heavy retracements, and it'll be inside of the 9:30 open to the 10:30 window. It's kind of like where you'll see that one-sidedness, and it'll look very, very firm on a 30-minute chart. So if I were to go out to a 30-minute chart real quick, and after that we can wrap it up. So when I go out to these 30-minute charts, like these days right here, just now, see how these 30-minute candles are very large and very one-sided. Even this one, large and one-sided, small retracement, large and one-sided. Those are the 9:30, one-sided, large and one-sided. This right here is 9:30, guaranteed. 9:30, large, one-sided. This was 9:30, large, one-sided. This was 9:30, large, one-sided. So The tight ranges are cool. You know what I'm saying? Manage your stop. Be aware of what's going on. And until next time, talk soon.